Hello, everybody. My name is Ian Delina. Welcome to today's presentation. Very, very excited to be here. Again, as a person from DC, actually, I'm in DC right now, here at my parents' place. So it's good to kind of be doing this talk virtually from DC. But let me do a quick intro on myself, my background, how I got into crypto, and then I'll give you my future outlook for crypto post the Bitcoin halving. So brief intro on myself. My name is Ian Delina. I'm the founder and CEO of Tokenmetrics. Tokenmetrics is an AI-driven crypto investment research platform that helps crypto investors and traders become smarter investors using AI, and basically helping people build wealth using AI in crypto. I'm also a general partner at Tokenmetrics Ventures. You've also probably seen me on TV, CNBC, Bloomberg, and some other shows and video shows online. Prior to that, basically, I was working at IBM. I was a technical sales engineer. Basically, loved engineering, loved technology. Prior to that, I was also an IT consultant at Deloitte in the DC area. And my background is in computer engineering, bachelor's and master's from GW, George Washington University in DC. And basically, I got into crypto back in 2016. It was around October 2016. Bitcoin was at $850 to $900. It was basically kind of bouncing in that range. Ethereum was between $8 to $10. And people basically saw me take a data-driven approach that I called Tokenmetrics back then with a spreadsheet and turn 20,000 US dollars into over $5 million in less than 1 year. And I showed people basically a data-driven approach or a Moneyball approach to investing in crypto assets, digital assets, that has now evolved into what is now our platform, where we now leverage AI and machine learning, Tokenmetrics. We actually recently just launched Tokenmetrics GPT, where we're basically taking the same technology as ChatGPT and using Tokenmetrics data for crypto, and now also plan to launch adding external data to our platform. But that's kind of a quick spiel on myself. But now let's really go into where crypto is going, right? If you've been in crypto for a while, you know this has been called Web3, the next internet, or digital finance, the next evolution of money going online, money being put on chain, on the blockchain. But crypto has really been in a long period, as it has every 4 years. It goes through cycles. But where's the future of crypto going, especially? So I want to delve deeper into that. And everything in crypto at this point in time, but also historically speaking, should be viewed from the perspective of when is the next Bitcoin halving. So here's a chart that shows the past Bitcoin halvings and the rallies that have happened after each Bitcoin halving. And so basically, let's begin all the way back here in 2013 with the first halving. We basically have this first halving. So prior to the halving, we had a rally in terms of the price of Bitcoin of basically 5.7x, right? Almost 6 times. Bitcoin went up in price. But after the halving, we had this huge rally. This is basically the bull run. This is where people create generational wealth in crypto and basically created the first crypto millionaires, where the price of Bitcoin went up 93x, meaning that $1,000 into $93,000. But as you see, then if we head into 2015, then we basically had the next pre-halving rally, right? So basically, the pivot points are the Bitcoin halving, and we have pre-halving, post-halving. Pre-halving is a small rally. Post-halving is the super rally, basically. But with each halving, the rally in Bitcoin, the returns diminish, right? Obviously, as it goes higher, it becomes tougher and more challenging to maintain the same level of returns each halving. So if we go to the next halving, which is when I got into crypto, basically, here between 2016 and 2017, you basically have 3.5x pre-halving rally to a 30x post-halving rally. But notice the post-halving rally has basically decreased by about a third. So 93x return in the past halving versus 30x. Then if we go on to the next rally, or the next Bitcoin halving, and basically between 2020 and 2021, the pre-halving rally is now down to 2.7x, and the post-halving rally is down to basically an 8x. So it's basically been cut in a third almost every single time, right? So now we're heading into next year. Next year, the next Bitcoin halving is slated to be happening in April 2024. What does that mean? And so here they have the projection. This is actually from Pantera Capital, I believe, from this slide deck. But they're projecting about a 2.3x return pre-halving on Bitcoin. So basically from now, or rather, basically from 2023 all the way up until next year in April or so, which means Bitcoin will be about 35K. And then if we take the same trajectory of all the past halvings, post-halving rallies, we're looking at about a 4x return in the price of Bitcoin, which gives us about 148K, or basically 150K price predicted for Bitcoin by the end of that rally, which is 2025. Now, this is where I kind of want to challenge about my own perspective. I think this is a great way of viewing the market and the future of Bitcoin, because the way Bitcoin moves is where all other crypto assets move, all other altcoins move. But historically speaking, we've experienced 15 to 16 months of a post rally after every Bitcoin halving. Now, looking at this, if you're saying, okay, Bitcoin is going to do a 4x return, is there really any money to be made in Bitcoin? And I would say that's very, very true, right? That's why we love altcoins, because money is made in Bitcoin, which then flows into altcoins. Altcoins is where you get the larger returns, the 40x returns, 100x returns, or sometimes even, although rarely, a 1000x return in crypto. But all that follows the cadence and the rhythm of Bitcoin. Bitcoin sets the rhythm, and everything else follows in the market when it comes to crypto assets. So this is basically a similar chart, just kind of breaking this down even more, right? I'm just basically talking to everything I just kind of mentioned earlier, right? We should be anticipating a 15-month bull market, because we have, if each cycle for the halving is 4 years, 2 years bullish uptrend, and basically I would say about a year and a half bullish uptrend, year and a half of bearish uptrend, and then about everything else is kind of flat in the middle. But this kind of gives us the same perspective. The halvings dictate where we should be viewing Bitcoin. And if you extrapolate this all the way out, we're basically looking at the Bitcoin halving happening in April 2024, and the top of the bull run in crypto, especially, or rather Bitcoin, but same thing as crypto, being in summer 2025. So basically that is the time to take profits and make sure you have taken out as much money as you can in crypto, because then the price action will start to decline. And it might sound very simple, but that's basically it. It's rinse and repeat. It's kind of like Karate Kid, Mr. Miyagi, wax on, wax off, right? You're gonna have pre-rally, post-rally. Now, obviously, this is a moving target. Things can change, right? If crypto becomes more regulated, or regulators, let's say there's a new president or a new SEC chairman, and they come in and they make crypto easier and more compliant in the US, this could change where the time frame could change. But as of now, as of today, this, in our opinion, is where Bitcoin is going, and this is how to play the next bull run to potentially build wealth in crypto. But let's say you're saying, why crypto, right? Crypto has been decimated from FTX to Celsius to BlockFi to all these different just bad companies that are just gone belly under. But if you look at the adoption of crypto versus the internet, crypto is literally the next internet. It's literally growing at the same pace as the internet grew, right? So if we look at the top here, we have basically since 1990 all the way up until 2000. So basically up until the dot-com boom. And crypto is basically growing at the same rate. And if we predict this all the way out for crypto, right? This was back in 2022, but we're now going down here 2023, 2024. We're basically predicting that this comes from the World Bank and crypto.com, basically predicting that by 2026 or 2027, we should have 1 billion crypto users. That's a 5x increase in the number of current users on crypto, right? Going from 200 million to 1 billion. This is why I keep on saying, stop viewing cryptocurrency or digital assets or even Bitcoin as purely just digital money. This is the next internet. There's a reason why this is called Web3, Web 3.0. Web 1 was basically the dot-com era. Basically, we had the Googles, the Amazons, the Yahoos, for those who recall. Web 2 was social. We had Facebook, Twitter, Instagram, WhatsApp. And Web 3 is now basically creating all these new applications where Ethereum is creating smart contracts, and everything's going to be in Web 3 where it's decentralized. It's peer-to-peer. There's no middleman. There's no central entity controlling. Everything is purely trustless. And then I always like to tell people, if you zoom out, it's always better to be an optimist when it comes to investing. Long-term optimism wins out. That is true and true. This is basically a chart of the S&P Composite Index dating back from the early 1900s. Right? So despite all the recessions, all the crashes, right, at the end of the day, being a long-term optimist wins out. Right? If you just zoom out wide enough, it pays to be a long-term optimist. So how do you play the strategy, right? If we have the Bitcoin halving happening next year, April 2024, we're basically currently in a pre-halving rally. And this is the time I call the accumulation phase. And then you basically create a list of crypto assets you think would do well. Our company and platform Tokenmetrics helps people with this in terms of helping people create a watch list or just rate crypto assets in terms of fundamentals technology that we think are deeply valued using our AI and our analytics. We think it's now up until the halving is the time to accumulate those crypto assets. And then post-halving, post-April 2024, we basically just kind of sit tight and just ride the wave for 15 months. And then we take profits and just wait for the market to crash and rinse and repeat every 4 years. So basically, that is the definition of value investing. Value investing is basically finding crypto assets that are deeply undervalued, where the market is pricing them at one level, but the intrinsic value is a lot lower. And it takes a while for the market to realize that it has mispriced that asset, that digital asset. And by the time it's repriced it, it has a new valuation. And that's where you make the profits, right? So from now up until April is basically the time to use platforms like Tokenmetrics and others to find deeply undervalued assets where you buy them at a very low price, which gives you a margin of safety from the actual intrinsic value. And so, for example, let's say Bitcoin is a crypto asset. Let's say Bitcoin is currently valued at what, I think 25K or so. This becomes 25, 30K. But we know by summer 2025, the market will reprice it at, let's say, 150K. Right? So as we had on the prior chart, that's a 4x return. So that's one way to basically value invest. Now we're doing the same approach, but we're doing this to altcoins, right? So imagine you find an altcoin that is at a valuation of 20 million, 10 million. Like take best case, an example I have here is Matic. People know me from Matic. I went to team back in 2018 in India. And this was from all-time low to all-time high, delivered a 900x return on your investment. Now, obviously, it's very hard to time this perfectly, but we were able to get a 400x return, so kind of almost about half of that, all from buying a crypto asset on public markets. Now, that means turning $1,000 to $400,000 in basically a year and a half, maybe two, on a crypto asset that's already trading on exchanges. This is not a special private sale. But looking at this example, right, the all-time low of Matic or Polygon was 0.0031 and so on May 10th, 2019. By December 27th, 2021, it went to an all-time high of $2.92, almost $3. But if you look at this, right, from May up until here, we basically had a year and a half of just it flat, it not doing anything. That is the accumulation phase. That is the pre-halving accumulation phase I talked about, right? And then post-halving, you have this huge rally. So really, the time you basically had a year and a half to accumulate and buy a great crypto asset that was undervalued. And once the market repriced it, you basically had over 100x return. So that this same process can be applied to lots of crypto assets in the space. Now, where do you pay attention, right? So I want to kind of shed light on some ecosystems we're watching. This is a developer activity report from Electric Capital. Just go to developer or just Google developer activity report or developer report. This updates every now and then, every month, basically. And the projects or the ecosystems to keep an eye on are Cosmos. Cosmos is gaining a lot in developer adoption. And then other trending, although not so big, but still worth keeping an eye on in terms of new developers joining these ecosystems. We have Aptos and we have Sui. They have over 400% growth in developer activity. Obviously, nowhere close to the likes of Ethereum. Ethereum is still good. Ethereum is still the king of smart contracts and developers. However, in terms of the alpha, you have to get into the ecosystems that are new, right? Solana did 1,000x last cycle. Same thing, right? They're nowhere close to Ethereum in number of the developers, but new projects, new ecosystems, developers work with their code. It always helps to pay attention to them because that's where there'll be lots of alpha and lots of growth in the market. Now, kind of going back into other key narratives I'd like to keep an eye on between now and the Bitcoin halving and even post Bitcoin halving, the key narratives to keep an eye on that our platform is watching, token metrics, cross-chain interoperability, so layer zero blockchains, ETH killers, other L1s, layer one blockchains historically always perform the best, from Solana to Polkadot to Avalanche. So next cycle, we have the big L1s and L2s as well, with module blockchains and rollups. So the key ones to keep an eye on will be Arbitrum, Optimism, ZK Sync, Layer Zero, Aptos, Sui. All of these, I think, are good to trade, but because of the tokenomics, not necessarily the best long-term investments. And then keep an eye out on ZK EVM chains, as mentioned, right? So ZK Sync and others, Scroll, Tyco. Then it comes to the AI ML space. OpenAI has really helped AI become a huge narrative, even for crypto. AI coins after OpenAI announced this big fundraise for ChatGPT by Microsoft at a $30 billion valuation. Almost every AI coin began to kind of take off, right? But if you like AI as a narrative, post-halving will do even better. And then account abstraction, making crypto assets and wallets a lot more user-friendly for people to use. That's one thing to keep an eye on. So imagine your MetaMask being a lot more user-friendly. All these are big narratives to keep an eye on. And with that being said, that's basically the conclusion of my talk. I know this was short, but you can definitely find out more by just going to Amazon or anywhere books are sold and search for a crypto investing guide. This is a book our team and myself have written on how to become a proficient investor in crypto. And we also have a free market indicator and also free plans for token metrics to help you begin analyzing crypto assets using AI. Just go to tokenmetrics.com. We also create content on on YouTube and social media. Just search for token metrics. That being said, thank you, everybody. Have a good day.